Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Recapping some of the top news from October 14th. Our story opens with macroeconomic ripples causing crypto waves. China's retaliatory tariffs on the U.S. sent tremors through the markets, with Bitcoin slipping below $112,000 and altcoins like Ethereum and Dogecoin dropping significantly. This triggered $630 million in liquidations, largely affecting long positions, and underscored crypto's sensitivity to global economics, a point Citi also highlighted. This volatility saw Bitcoin test $111,000 support, while many altcoins suffered more. Plasma plunged 58%, and FET, OP, and ETHFI each dropped over 35%. Even BNB, post all-time high, slid 6.5%, and HBAR fell 8% after failing to break resistance. A tough day, indeed, for leveraged traders. Meanwhile, Dogecoin and XRP encountered resistance. Whale sales and regulatory scrutiny weighed on their momentum. Dogecoin couldn't hold above 22 cents, closing at 21 cents, and XRP faded below $2.60 due to a $63 million whale transfer. Memecoins weren't spared, with PEPE slipping 5% from whale selling. Yet, amidst the red, a beacon of institutional confidence, BlackRock's IBIT bucked the trend, attracting $134 million in inflows over 2 days, marking 10 consecutive positive days. This suggests sustained institutional interest despite broader market volatility. Now for a story of traditional finance embracing digital assets. Wall Street giants like BlackRock and DWS are doubling down, eyeing tokenization and stablecoins as future financial infrastructure. BlackRock CEO Larry Fink sees a larger role in tokenization, while DWS predicts stablecoins will surpass Visa/MasterCard in transaction volumes. Citigroup CEO Jane Fraser also emphasized tokenized deposits, not just stablecoins, as the future for their lower friction and regulatory alignment. The stablecoin landscape is evolving rapidly, challenging Tether and Circle's dominance. New entrants like USDA and USDH are gaining ground, while regulations like MiCA are forcing adaptation. Société Générale Forge and Bitpanda are bringing regulated stablecoins to DeFi, and Stripe's Bridge applied for a national bank trust charter to expand its regulated stablecoin business, aiming to tokenize trillions of dollars. Bernstein suggests Circle can withstand rate cuts due to growing USDC demand, and William Blair called Circle the most important stablecoin player, believing USDC could replace fiat in B2B payments. S&P Global is even bringing stablecoin risk scores on-chain via Chainlink for real-time risk evaluations. The market is becoming more competitive and regulated. In a surprising twist, Elon Musk hinted at renewed interest in Bitcoin, stating, "Bitcoin is based on energy. It is impossible to fake energy," suggesting he's re-engaging with its fundamental value. Innovation continues, with Ethereum's Fusaka upgrade rolling out on Sepolia, introducing PeerDS to reduce data costs for Layer 2s. Monad also opened its airdrop portal ahead of its Layer 1 token launch. In the world of Bitcoin miners and treasury firms, Iron's AI pivot earned a $100 price target from Cantor Fitzgerald, recognizing its undervalued AI cloud services segment. However, Metaplanet, a Bitcoin treasury firm, traded below 1x NAV for the first time, reflecting a broader trend where some firms are valued below their crypto holdings. More institutional moves. WisdomTree launched a physically backed Stellar Lumens ETP in Europe, offering institutional exposure to XLM's spot price, even as XLM suffered a massive sell-off. Cathie Wood's ARK Invest took an 11.5% stake in Soulmate Infrastructure, SLMT, a Solana treasury firm, further highlighting institutional interest in the Solana ecosystem. Finally, our story takes a turn into law enforcement. The U.S. launched a major crackdown on Cambodian pig butchering scams, seizing over $14 billion in Bitcoin, the largest crypto seizure ever. This involved indicting a Prince Group founder and sanctioning the group. In other recovery news, the Celsius wind-down secured nearly $300 million from Tether, settling a bankruptcy dispute and aiding Celsius's exit from bankruptcy. What a day, folks! From market turbulence and institutional maneuvers to technological advancements and major law enforcement actions, the crypto world never stands still. That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.